All right, so today we're diving into something pretty exciting, I think, at least for anyone who's thinking about, investing and stuff. We're talking about predictions for the S&P 500 in 2025.
Oh yeah. Always fun to look into the crystal ball.
Yeah, exactly. And we've got some pretty big names weighing in on this. We've got UBS, we've got BMO Capital Markets, and we've got Morgan Stanley.
Three of the heavy hitters.
Yeah, exactly. So what's the overall vibe? What are they thinking is going to happen?
Well, I think the big takeaway is that all three are feeling pretty bullish about the S&P 500 in 2025. They see it going up.
Oh, interesting. So no doom and gloom this time.
Not really, no. I mean, there are, as always, some potential risks and things that could happen, but overall, yeah, the sentiment is pretty positive.
Okay, well that's good to hear. So what kind of numbers are we talking about here? Like how much growth are they predicting?
Well, UBS is predicting that the S&P 500 will hit 6,400 by the end of 2025,
Okay.
which that's a gain of about 9% from where we are now.
9%, all right.
BMO is even more optimistic. They're going for 6 to 700,
Wow.
which would be closer to a 14% gain.
Oh, okay.
And then Morgan Stanley, they're kind of in the middle. They're predicting 6,500, so about a 10.7% gain.
Okay, so a decent spread there, but all positive.
Yes, exactly.
So what's driving this optimism? Like what are they basing these predictions on?
Well, one thing that all three institutions point to is the potential for, pro-business policies.
Okay.
Things like, deregulation, maybe some tax cuts.
Okay, so kind of like a favorable environment for businesses, they're thinking.
Exactly, yeah. And
Yeah.
and they think that this could, especially benefit certain sectors like small cap stocks and financials.
Gotcha.
Yeah.
So if those policies come to fruition, then we could see some real movement in those areas.
Yeah, potentially.
Interesting. But are they just basing it on those potential policies, or is there anything else?
Right. There are other factors too. For example, Morgan Stanley, they're putting a lot of emphasis on the Fed's recent rate cuts.
Okay.
They think that this is going to, inject some optimism into the market.
I see. Yeah, because lower interest rates usually mean more borrowing and more investment, right?
Right, exactly.
Which can then stimulate growth.
Exactly. And then you have BMO, who are really focusing on strong corporate earnings.
Okay.
They're projecting that S&P 500 earnings will reach $275 per share in 2025.
All right. So that's pretty significant.
Yeah.
So we've got this kind of trifecta of potential positive factors, right?
Uh-huh.
Potential pro-business policies, the rate cuts, and then potentially strong corporate earnings. So
Yeah.
so that all sounds pretty good, I would say.
It does. But, it's important to remember that the market is rarely a smooth ride. There are always bumps along the way.
Right. Yeah. So what kind of bumps are we talking about here?
Well, even UBS, with their pretty optimistic outlook,
Yeah.
they are expecting a bit of a pullback in the first half of 2025, like about a 5% pullback.
Oh, okay. So a little bit of a dip before things hopefully pick back up.
Right. Yeah. They're kind of saying, buckle up. There might be some volatility before things rebound in the second half of the year.
Okay, interesting. Is that 5% dip? Is that tied to anything specific, or is that just kind of general market fluctuations?
Well, they point to a couple of things. One is that, as BMO points out, the current bull market is kind of entering its historically weakest third year.
Okay.
And then all three institutions mention some potential risks on the horizon, things like rising inflation,
Hmm.
a stronger dollar, and potentially some spending cuts that could impact economic growth.
Right. So even with all this optimism, there's still some potential storm clouds on the horizon.
Yeah. Exactly. And even Morgan Stanley, with their base case of 6,500,
Hmm.
they also present a kind of a bearish scenario, where the S&P 500 could drop to 4,600.
Whoa. Okay. So that's a pretty significant drop from where they're predicting it to go in their more optimistic scenario.
Right. Well,
What do they say could trigger that kind of a drop?
well, they point to those same potential risks that we just talked about, the inflation, the strong dollar, spending cuts. If those things were to kind of combine in a particularly negative way,
Hmm.
it could lead to, a pretty major market correction.
Okay, so it sounds like it's definitely not all sunshine and rainbows. There's a lot to be excited about, but also some things to be aware of.
Absolutely, yeah. I think it's important to understand those potential headwinds and how they could, potentially play out.
Yeah, for sure. So speaking of playing out, are there any particular areas of the market that these institutions see as potential winners in 2025? Like, are there any sectors that we should be keeping a close eye on?
Well, both UBS and Morgan Stanley, they think that small cap stocks could do quite well, especially if those pro-business policies that we talked about earlier, if those come into play.
Oh, interesting. So those smaller companies could be poised for a big leap forward if the conditions are right.
Yeah, potentially.
Okay. And are there any other sectors that they're highlighting?
Morgan Stanley is particularly bullish on financials.
Okay.
They point to the sector's 6.8% gains since election day as a sign of things to come.
So they're thinking that those potential policy changes and the rate cuts could really give the financial sector a boost.
Right. Exactly.
Yeah.
Okay. Interesting.
And then tying into that, UBS in their global outlook, they're expecting that U.S. equities will outperform Europe. And that Europe will do better than emerging markets, at least over the next 12 months.
That's a fascinating global perspective there. So it sounds like they're expecting the U.S. market to maintain its strong position.
Yeah, that's how it looks. Yeah.
Interesting. So it seems like we've got this interesting mix of optimism and caution here, right? Potentially a bright future for the S&P 500, but also some potential roadblocks along the way. It's kind of like, looking through a foggy crystal ball, right?
Yeah, I like that analogy. Yeah.
Yeah, you see those glimmers of potential, but then there's also those those shadows lurking around the edges.
It's all very thought-provoking.
It is. I think, that's kind of the beauty of it all, right? Trying to make sense of these predictions, weighing the potential rewards against the risks.
Right, exactly. So where does this all leave our listener? What should they be taking away from all this information?
Yeah, I mean, it's important to remember these are just predictions.
Right.
They're, not guarantees.
Yeah, they're not like a roadmap to riches or anything.
Exactly. Yeah. Everyone needs to kind of consider this information, think about their own goals, their own risk tolerance. What works for one person might not work for another.
Yeah, it's all about finding that right balance for you, right?
Absolutely. Yeah. I think, these predictions are a great starting point for, a conversation about, your own financial strategy.
Right.
But they shouldn't be, the only thing you consider.
So less about following them blindly.
Right.
And more about using them as a jumping off point for your own decisions.
Exactly. Yeah. I think, understanding these forces at play in the market can help you make, more informed choices.
For sure. For sure. So, all right, let's kind of recap here. So we've got this generally optimistic outlook for the S&P 500 in 2025, driven by things like potential pro-business policies, the rate cuts,
right,
and strong corporate earnings.
Yeah.
But we also have to keep in mind those potential bumps in the road, like rising inflation, the strong dollar, the possibility of spending cuts, all that.
Absolutely.
And we saw that some sectors, like small caps and financials, might be particularly attractive in this environment.
That's what they're saying. Yeah.
But as always, got to do your own research.
Right.
Got to do your own due diligence.
Make your own decisions.
Exactly. Well, on that note, I think we'll wrap up this deep dive into the S&P 500 predictions for 2025.
Yeah, it's been quite a journey, hasn't it?
It really has. From those bullish forecasts to those potential pitfalls, we've covered a lot of ground.
Yeah, we have.
I don't know about you, but I'm feeling a lot more informed.
Me too. It's it's definitely given me a lot to think about.
Yeah, even though all these predictions give us a lot to consider, I think the main takeaway is that it's really just a starting point, right? The real value is in taking all this information and figuring out how it applies to your own personal investing approach.
Absolutely, yeah.
Yeah.
Investing's not just about numbers on a screen. It's about, your goals, your dreams,
Right.
what you want to do in life.
Exactly. Yeah. Whether you're, saving for retirement or a house or your next big adventure, understanding the market can help you make, smarter choices.
For sure. And, who knows? Maybe someday we'll look back at these predictions and see how it all actually played out.
Yeah, it'll be interesting to see which ones were right on and which ones were, way off.
Yeah, I mean that's the thing about the market. It's always full of surprises.
It is. It is. But even with all that uncertainty, I think one thing remains constant. Knowledge is power.
Hmm.
So the more you understand about the market, the better prepared you'll be to navigate all those twists and turns.
Couldn't agree more.
Well, on that note, I think we'll wrap up this deep dive into the S&P 500 predictions for 2025. Thanks for joining us.